Hello friends, Jason here. I'm going to do a quick video for you on the TCG BackBurner. I've been asked a lot of questions about it, so I'm going to try to put together a little bit of a guide. We're doing this all in one take, and we're going to answer the questions I've been given. We're going to take a look at the indicator itself on the trading view, what you're seeing, what you should expect to see, and how to react to it. And we'll look at the menu real quick and maybe even some demos. So, what is a TCG backburner? It's an indicator that looks for really strong directional markets combined with short-term momentum and FOMO, combined with a lack of consolidation to create what we believe is the most pristine condition for a oversold bounce or an overbought short opportunity. And we'll look at both of those because they work on both sides on the back burner. So in short, yeah, we're looking for extreme oversold conditions or overbought conditions in environments and contexts that really support a strong pullback or a strong bounce as soon as those overbought or oversold conditions are met. So you may be asking yourself what exactly we're looking for. Well, I don't want to give away the secret sauce, but we're really just trying to find a combination of EMA trajectories, trend health, trend length, and combine that with recent price action and level breaks to try and find those perfect moments. And a question that I'm often asked is, does it work on all time frames? Sort of. If you have a time frame that has a parent time frame with enough data, it will work. For example, I'm looking at the hourly time frame right now. The data for my hourly time frame is going to come from the daily chart. So I need to make sure that on the daily chart, I've got enough candles to populate the calculations for my page. If I'm looking at the daily time frame and I have a recent IPO and we've only been trading 10 days, it's not going to work because there's just not going to be enough data there to calculate from the parent time frame to give me something useful. In most cases, it will work for you. Some cases, just not enough data. So take a look at your chart. You'll be able to figure out why it's not working if there's just not enough candles there on the daily time frame. So we've talked about what it is, the basics of what it's looking for, the time frames that it works on. Let's take a look at what we're actually looking at on the chart. So the first thing that you should notice when you add the backburner indicator is that you've got these lovely little gray lines. These gray lines, they represent the moments where your price action on this given time frame will be going into our oversold or overbought levels. That's it. They are where the price needs to be for our RSI to be 30. In this case, we can see we needed to be just below that gray line, and we certainly were. Our RSI was sub 30. Now, somehow, if the bulls really poured on the steam and got BA all the way up to 212.12, our RSI would be over 70, thus creating a possible intersection with our gray line up here. So yes, gray lines just represent your RSI levels, overbought, oversold, wherever they are on the time frame that you're looking at. So that's the gray line. But there could also be green and red lines. Now we're just going to go back over here just a little bit, and we're going to take a look at the chart now. So in this case, we see that our gray line became a green line. What that indicates to us is that we are actively looking for overbought conditions. We are waiting to see if the price action, this short-term boost to the upside, is going to be enough to create a RSI plus 70 condition combined with our overall short-term strength and momentum to create that perfect RSI backburner overbought. And we can see that those conditions were met. We have, let's see if we can zoom out a little bit, a nice daily trend. We have short-term upside momentum, overall hourly higher lows, and we've got a sort of a runaway price as we open up in the morning. So we end up with a perfect condition for a backburner overbought. Does it always result in a straight pullback? No, we know that's not how the market works. We create some most likely outcomes, and we can see that we sort of slow down just a little bit. Now I have another really good example here of using our green lines. Let's go over here just to the right. And on our hourly time frame, we can see that we've got gray lines. We have an hourly downtrend, lower highs, lower lows, and we get a very powerful short-term drop right down to our support at 195.42. So we have a directional trend. We have increasing distance of our EMAs. We have price action that is supportive of a breakdown or a FOMO or a momentum, just a really rapid move in the short term without much justification or explanation. And sometimes you don't need that. That's our hourly time frame. So this data here is going to get incorporated to our 5-minute. We go to our 5-minute time frame, we can see our big drop down. And as our BackBurner calculates, we should see, there it is, the moment that we start to look for BackBurner setups. Now, we don't really have a BackBurner overbought yet, but what we can see is that the system is actively watching and waiting to see if the price level happens to pop back up over 70. Now, if we go sideways, eventually this will shift gray again, which means that our BackBurner overbought conditions are no longer active. So when we see the green line, it means the system is actively watching and waiting for the RSI to hit 70. If we go down here and we were to see that this line was red, it's actively waiting for the price action intersect with that red line to create the oversold condition that would trigger the BackBurner oversold indicator. So to summarize, we have gray lines, we have colored lines. The colored lines indicate when the alert is active, and finally we need that price level to cross the red or the green line to actually create the condition for a alert to activate. Now let me show you some examples here on QQQ. This was from December 8th. We had a active scan throughout pre-market. Given the strength that we had seen in the previous day, huge moves up, no consolidation is taken, and the first 5-minute oversold condition was going to be a prime BackBurner setup. So what I can do is here, let's go forward just a titch. We came down, our alerts activated the moment they crossed that. And, well, I know it was there. I'm not sure what's not working in our demo. But let's just go find that chart. Where was that BackBurner trade? Way over there. There it was. All right. So our BackBurner oversold did fire. Perhaps this doesn't work in replay, but there you go. BackBurner oversold. First 5-minute oversold condition since our run up. Bulls buy it, defend the low, and hold for the day. A pretty good example of that one. We see something similar on AFRM. Let's go close that replay because it doesn't seem to work quite properly. And that was from December 8th as well, I believe. There it was. Strong directional days, 5-minute oversold, bounce, an exceptional follow through on the BackBurner oversold. So hopefully that helps you get an idea of what you're looking at. I do have another example that we can go look at on Apple. Now we're using this Apple chart to walk through our menu. So we've already talked about the gray lines, the red lines. Let's take a look at the menu here. Okay, so here's our BackBurner inputs. We got something called the look back factor. Now what we're trying to do here is determine how many periods we are going to use historically to calculate our optimal conditions. If you increase your look back factor, it's going to incorporate a lot more data and you're going to require a lot stronger trends. If you have a very small look back factor, you're going to get far more reactive conditions with less follow through. We found that 5 is a pretty good level for us to be looking at, and that's a good look back factor that I've been using pretty effectively. The BackBurner overbought level, that's just the RSI level where you consider something to be overbought or oversold. And what we can do with that is just increase it to change our calculation. So now we'll be looking for RSI to be overbought, and we will consider overbought to occur when it is at 59. And then you can see our calculations repopulating. I'm going to go put that back to 80 just for fun, or I should say 280 just for fun, to show you the recalculations as the little eye here spins and moves our RSI right up. So tune it however you like. Let's stick with a regular classic 3070. We can also look for our alert timeouts. And to demonstrate that, what I'm going to do here is watch our BackBurner that tripped in our after hours or pre-market on Apple. And what we can do is change our timeout. So in this case, we get a BackBurner oversold indicator. And for 50 periods, this ticker is not going to fire another example of a BackBurner indicator, just to stop you from getting multiple alerts over and over and over again. But let's say you want those. You can change the timeout on your alert to be 10 periods. Hit OK. And it should populate one for us. Perhaps, there it is. So we have changed our timeout. We can see that the gray bar is active for 10 periods. The alert conditions are met again. And then we get another BackBurner oversold and a nice little, $2-3 run. So all in all, pretty nice little ability to change your timeout factors and your periods. Again, we'll stick to 50. The next one, tolerance, is a little bit more hard to explain. Essentially, what we're doing is just increasing or decreasing the tolerance for how much wiggle room you want to see in your alerts. Let's say your conditions are within 10 cents. If you want to be really strict, well, then you can be 0 and say, look, we were within a penny, but it didn't hit that exact level, so we're not going to be able to do that for you today. What that will do, it will create conditions, of course, where your backburners are just perfectly mathematically sound, but that's not always the best case, right? So what we can do is go from 0 to 5, 0 being the most strict, 5 being the least strict, 2 is the default setting, just to let you capture the most possible, yet the most accurate types of setups. I believe those are the basics of the BackBurner indicator. If any of you have any more questions after this, you're still not quite sure how to use it, you have more curiosities, feel free to send them my way. I will do another video and we will expand on this topic and make sure that this video is as effective as possible. Thanks.